Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 23rd, 2012. This is Patrick Seresna. As always, we start off a chart in the S&P 500 using that spider exchange rate fund symbol SPY. Over the last 3-4 weeks, we've maintained our bullish bias on this market and continue to believe that the stock market is in a position to advance even over the next few months. The only thing that we're trying to determine here is whether or not it's going to advance that move in a straight line, or whether we get a much needed market correction that wouldn't be much more than 5% or so on the downside, but nonetheless would allow the market to consolidate before advancing higher. If one of these consolidations were to occur, it is likely that a number of support lines would still be holding in even the 127 area down below. A much stronger correction might even head down towards 124, 123, but we don't believe that that is likely to be the case unless there's a news or a catalyst associated with it. More than likely, we are probably going to see at some stage a scenario where we have a 1 or 2 day good sell-off, and then a quick rally that undoes much of the selling, and then probably a further sideways price action. It's quite possible that 2 weeks from now we may very well be at the exact same price level that we're talking about today. But nonetheless, these consolidations are important in order for the market to maintain and advance higher. At this juncture, it's likely by February or March we will probably not only see the 135, 137 high, but there is even a chance that we might even get up to 140, 142 on the upside. In the much bigger picture, we believe that that would be where even the highs of the year may occur, but nonetheless, at least on the short term, we're anticipating these markets to advance. Next year, we're going to take a look at the ISE US Regional Banks Index, which is a symbol JLO. Regional banks have been doing very well. We've seen it advance right up to this 22.50 area on the upside, and a little bit of a market taking a breather here. At this stage, again, even a short-term sell-off down towards 21 would simply be a buying opportunity, and more than likely, over the next month or more, regional banks should be trading even up to the 23.50, 24 area on the upside. So really, the theme here is on a little dip, you would want to be a buyer. Next year, we're going to take a look at the ISE Index, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. A distinct break to a higher high, now completing some short-term measured moves on the upside. We still have an upside target of 140, 142 on the upside here, but likely it's not going to go there in a straight line, just like it did in the last couple weeks of December, or even in the first week of December, where these little pullbacks occur for a week or for a few days. One of those is likely to occur at some juncture here before that final advance up to 140, 142, but that will more than likely be a buying opportunity, so you want to be also buying on dip on this index. Next year, we're going to take a look at the ISE Home Builders Index, which is symbol RUF. The home builders have finally made a really good push to our upside profit target zones of 910 to 950. And there's just pure momentum coming here in the home builders as money's really rolling into this sector. Overall, we remain optimistic to home builders just from the price action perspective, but we do recognize that there is substantial overhead resistance here. So while we're recognizing trend, and we certainly are not prepared to become bearish on the home builders yet, but the advances should slow, and every time it pushes higher, it should meet some selling. So you want to be a profit taker into strength up into this overhead resistance. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and the Natural Gas Index continues to consolidate along that support line around the 105, 108 level. At this juncture, if that support line gives out, it opens a window for the Natural Gas Index and the subsequent stocks to drop towards lows that we haven't seen since October. This index continues to buck the trend of the broader markets, and we remain relatively negative and bearish the natural gas index until some sort of more bullish price action emerges. So right now we want to relatively stay neutral to negative on this index. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. We have a break to a higher high above that 565, 570 level. The window is open for a move even up to the highs of June and July of last year when it was up at the 600, 610 area, but it's very unlikely that it's going there in a straight line, and it probably may take well more than a month for it to get there. So more than likely we'll expect some sort of short-term pushes higher, little pullbacks that could be bought, and anticipate the FTSE, like all the global indices, to do relatively well over the next month or so. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.